Greetings, members, one and all of the Salivation Nation. We're going to take a deep dive inside of the JPMorgan precious metals manipulation trial. Yes, indeed. This is a pretty big deal. As most of you know, I have been covering this story since its inception. And when they were fined, the JPMorgan is an institution, almost $1 billion for precious metals price manipulation. I'm going to look at a trial of those involved in this. There's a piece here by Bloomberg that talks about the ongoings here. We'll talk about it, why it's important for us to pay attention to what's going on in the news and what's happening with precious metals. And the precious metals business at JPMorgan Chase & Company operated for years as a corrupt group of traders and sales staff who manipulated gold and silver markets for the benefit of the bank and its prize clients, according to a federal prosecutor who told jurors in Chicago. And so it's more than just their selfish gain of what the prosecution is alleging here. The case is about a criminal conspiracy inside one of Wall Street's largest banks, said Lucy Jennings, a prosecutor with the Justice Department's fraud section. To make more money for themselves, they decided to cheat. The trial of 3 former JPMorgan employees, including the veteran head of precious metals, Michael Norwalk, is the most ambitious effort yet in a years-long U.S. crackdown on market manipulation and spoofing. Unlike past cases of alleged trading fraud, the trio is accused of a racketeering conspiracy under the 1970s RICO statute. This is the Racketeering Influenced and Corrupt Organizations Act, which is a criminal law more commonly used against the mafia rather than global banks. Norwalk, gold trader Greg Smith, and Jeffrey Ruffo, an executive director who specialized in hedge fund sales, are charged with racketeering, conspiracy, as well as conspiring to commit price manipulation, wire fraud, commodities fraud, and spoofing from 2008 to 2016. Altogether, Norwalk and Smith have been accused of more than 24 crimes. The 3 defendants face decades in prison if convicted on all counts. Another trader, Christopher Jordan, who was charged alongside them, is scheduled to go on trial in November. Spoofing, banned by law in 2010, involves huge orders that traders cancel before they can be executed in a bid to push prices in the direction they want to make their genuine trades profitable. While canceling orders isn't illegal, it is unlawful as part of a strategy intended to dupe others. When this trick works, there is somebody else on the other side of the deal that lost, Jennings told jurors in her opening statement. Somebody got ripped off, she added. We will prove that all 3 defendants knew from day one that this trading was wrong and did it anyway. So that's the case they're making. They feel pretty confident that they'll be able to, make a case that could lead to conviction for these 3 gentlemen. Lawyers for Norwalk and Smith offered jurors a much different view, saying prosecutors had misrepresented how and why orders are made in the precious metals market, and insisted that the defendants had never intended to deceive anyone. They said the government had cherry-picked trading data to create a false impression that the traders were spoofing when they were actually placing real, executable open market orders. The government's simple narrative doesn't tell the full story. Far from it, David Meister, Norwalk's attorney, said in his opening statement. Jonathan Kogan, Smith's attorney, said that gold and other precious metals were traded in a marketplace where computer-generated algorithms can buy and sell commodities in a millionth of a second. That's high-frequency trading. To compete with the so-called algos, short for algorithm, and the execute trades on behalf of JPMorgan clients, Smith routinely had buy and sell orders at the same time, Kogan said. While some orders were only active for seconds, that's an eternity in such a fast-moving market. According to Meister, Evidence presented in the trial will show that the vast majority of all market orders are canceled, and that typical lifespan of an order is just a couple of seconds. The defense team also said there's no evidence included in JPMorgan chat logs or recorded phone calls showing that traders Norwalk and Smith were thinking, which means prosecutors can't prove they intended to cancel orders before executing them. In order to win this case, the prosecution must prove beyond a reasonable doubt that what was going on in Mr. Smith's mind all those years ago, Kogan said. Rufo's lawyer, Guy Petrillo, said his client was a JPMorgan salesman who worked directly with customers who wanted to buy or sell precious metals, and that his job was to bring in client orders. Rufo never placed any of those orders, wasn't involved in trading execution, and that his compensation wasn't linked to the profitability of the bank's trading activities, Petrillo said. Almost sounds like that defense is like trying to distance himself from the other two, which does not bode well for the defense of the other two, in my view, but notwithstanding, there are some key witnesses here. Jennings said electronic communications and other evidence will show how the three collaborated to make sure their trading impacted markets in their favor. She said the government will call upon former traders who worked under Norwalk or with the defendants. That includes John Edmonds, a former JPMorgan trader who previously pleaded guilty on charges linked to price manipulation. Another likely witness for the government is Corey Flom, who worked with Smith and Rufo at Bear Stearns before it was acquired by JPMorgan before the financial crisis. Flom pleaded guilty in 2019 to attempted price manipulation. Following the opening statements, the Justice Department said its first witness is likely to be John Sheeter, who will testify on the Chicago Mercantile Exchange's operations and futures market mechanisms. Prosecutors allege Smith and Rufo brought their illicit trading tactics from Bear Stearns and JPMorgan, and their trading strategy was quickly adopted by Norwalk and others. The Bear Stearns traders' twist was to place multiple orders at different prices that in aggregate were substantially larger than the genuine order, a technique the government calls layering. The ordering made in rapid succession after the genuine order would be canceled as soon as the genuine order was filled. Crazy. What a crazy system that's in place for trading these precious metals. Smith, a lead gold trader, executed some 38,000 layering sequences over the years, or about 20 a day, prosecutors said in filings. Norwalk himself primarily traded options, but he would dip into the futures market to hedge those positions. He tried his hand at layering in September 2009, according to filings, and went on to use techniques some 3,600 times. Man. While some of the transactions started before lawmakers banned spoofing, the tactic allegedly continued to be widespread, with the JPMorgan traders engaged in spoofing more than 50,000 times in almost a decade, prosecutors said. Rufo, meanwhile, is alleged to have told Smith where he needed the market in order to fulfill orders involving at least two of his hedge fund clients, More Capital Management and Tudor Investing Corporation, according to court filings. Lawyers for Rufo said that others said that they may call traders from those hedge funds as well as one from Soros Fund Management to testify about transactions. Yeah, you heard right, Soros Fund Management. The witness list also includes 6 current and former JPMorgan sales staff on the precious metals desk, 2 of whom supervised Rufo. The government crackdown by the Justice Department and the U.S. Commodities Futures Trading Commission has nabbed more than 24 individuals and firms, from day traders operating out of their bedrooms to sophisticated high-frequency trading shops and big banks, including Bank of America and Deutsche Bank, in this crackdown. Not every case was successful. In 2018, a jury acquitted a former UBS Group AG trader of conspiring to engage in commodities fraud, and in 2019, a case against a Chicago programmer who created spoofing software ended up in mistrial and charges were dropped. In the JPMorgan case, bank fraud charges against the 3 defendants were thrown out by the judge. Still, the government has many more wins. 2 former precious metal traders at Bank of America's Merrill Lynch were found guilty of spoofing by a jury in Chicago last year, And in 2022, Deutsche Bank AG traders were convicted. In September 2019, JPMorgan admitted wrongdoing and agreed to pay more than $920 million to resolve U.S. claims of market manipulation in both precious metals and treasuries. It was the largest ever sanction against a bank over spoofing by a wide margin, but pales in comparison to the amount of money that flows through that bank each day and to their profits. JPMorgan also agreed to help the Justice Department prosecute its former employees. Now that is interesting indeed. What a thing that is to be able to have they're turning on their own there. What an interesting story. So that gives you a little bit of the inside scoop of what's happening there. I think the biggest thing out of this is it's going to open up the eyes of many to really get into these trades and how they're done. It's very complex, and technology is being used. And whenever technology can become ever so complex to be able to execute these trades, and you can create all these derivatives, sooner or later something's got to give somewhere, somehow. Now again, have had to kind of explain myself on each one of these videos that I do. We know manipulation is real, but is there a cabal? Is there a conspiracy to suppress the price of metals over the long term? My answer is I don't know, and likely not. But with technology and what the government's case here is that they may look at it as a conspiracy with JPMorgan in order to try to profit themselves and to bring the prices down or up in order to profit. That's just it. It can go both ways. As long as they get the bottom line increased for themselves, they really don't care where precious metals go. But there's some that feel there's a cabal or conspiracy between these institutions. We know now the two top are JPMorgan and Citigroup as far as the derivatives market. So what about these trades? Since spoofing is now illegal, would they be so bold to continue to do it? Is this why silver prices are so low now? Ask yourself that question. If they can be so emboldened and it can be seen by you and I in these trades, then more than likely it's probably not illegal, and there's probably something explaining it. You have to think in terms of common sense with regards to this type of thing, especially now that this is making news by major media outlets. They would not, bite themselves or kick themselves in the face by doing these brazen acts, which leads me to contend that likely it's natural market forces that are at a much greater play. And I'm not saying that there's not some manipulation still going on. I think the very fact that there is this massive derivative market speaks volumes. But regardless, this video is to help shed some light and also to make us think a little bit about where things are in terms of the precious metals manipulation. And what we can do in the meantime is to stack on, continue to acquire precious metals to protect and preserve our wealth, because we know that they cannot suppress it to zero if you believe in price suppression. No, they cannot. So we will stack on, we will hold on. We believe in what the precious metals have proven to have done for thousands of years. Hope you found this video insightful. Would like to extend a multitude of gratitude to you all for taking the time to watch and to encourage you to please rate. That means thumb up the video. That's down below there. There's a little thumb up button if you press it somewhere underneath this finger that I'm just fondling down here. Yes, indeed. And share it upon other social media platforms. Yes, you have my permission to do so. Comment and press that notification bell so that you can be apprised of the latest video that makes its way across your platform, across your device. And subscribe.